Bear flags. This is Chris Brecher with a 5-minute learning video. Just a quick one on bear flags. Now, I know a lot of people have seen videos on bear flags, but the way I look at it, it's all about probability of a bear flag working. And how do you know which one to look for that would be the best idea? Well, number one, and a lot of people get this wrong, most patterns up and down are consolidation or continuation patterns, not reversals. The biggest thing I see as a problem is trying to find a bear flag on the way up. So, you first thing you want to do is identify if it's an uptrend or downtrend. Now, I did a video that I had a ton of views on the 9, the 20, and the 50 moving averages and how I use them. You can see it right here. Lennar, what happened in here? It was in an uptrend. It's the transition area. Under that dotted line is a big deal. That's the first shot across the bow. That's the 20 moving average. You can see it here. So at least you get it in an intermediate downtrend. Under the 50 is a longer term downtrend. But when you get that, you can at least go to one time frame less to time an entry on a bear flag. So I'll show you what we're talking about. Over on the right, that's a bear flag, a sell-off consolidation. And this is called a head and shoulders consolidation, where you went down. It forms like a head and shoulders. But there's a little bear flag for you. Now, where could that go? Just take 132, forget about the measuring implication, and go to prior tops. Prior tops is that area. So your first area is that 122 level. So the key in there is the lack of support on the way down. So number one, and you could see it even with a longer term bear flag right here. So the first key is the lack of support on the way down. The next key is at least a rollover on some moving average. Now, before you say, oh, the OKLOs in the world are going nuts, you should only look for longs, I want to open your eyes about something. This is FinViz. I have put in a scanner. This is FinViz. It's free. I haven't even logged in on the right. What you're going to notice, all I did in here is I took stocks under their 50 moving average, and then I went over here to descriptive. I took stocks over 50, stocks, not funds. A lot of funds are a scam, these inverse ETF stuff. And I took average volume over 500,000. I bet you didn't think there would be 362 stocks under their 50 moving average. That means they're in a longer term downtrend, which means you can find bearish patterns within those. So if you go into here and now instead of just showing overview, like I'm showing, you go to charts and you go into the Costco's of the world under the 50. You have Intuit under the 50. See that bear flag? Yeah, that worked great. Under the 50 and an air hole underneath. So a lot of people say, oh, stocks have to fill their gap. No, they don't. What happens is on the way down, the path of least support is the gap. That's why they fill them. But go and check this out, and I'll show you what we're talking about. Go look at all these. Northrop getting under the 50, but it's just starting to get there. What's that mean? That when it's over it, these bear flags are less likely to work. Roper. Yeah, I always remember that from Three's Company, Mr. Roper. And I always tried to wear the shirts like Don Knotts wore in it. But as you see in here, definitely intraday, you're going to be finding bear flags and Roper that are more likely to work because it's in a downtrend. In fact, let's just go to Roper. I haven't even looked it up, but let's just go to it and I'll show you. So let's go into Roper. And let's go take the daily chart, and you can see decisively broke. Holy cow. Now what we're going to do is take an hourly chart on the right. Like I said, if it's in a downtrend, and this is a decisive downtrend, you can take off the 9, you can take off the 20, you can just look at that. And when you see that, what are you going to notice on the right? You're going to see a bear flag. You're going to see one of those head and shoulders consolidations, sort of a bear flag. And you get a bear flag here. The moral of the story, bear flags are more likely to work in a downtrend. Now, you might say, well, why did this one have a bear flag and have such a sharp bounce? because it bounced near support. Always care about that air hole. You got to care about the air hole in here. When it broke here, it had no support till here. When it broke here, it had no support till here. If I move it to the right, you'd see the support zones over here. So just keep that in mind. You'll see the 510. You see those areas. So those bear flags are going to stop in those prior areas. So the key in there is definitely identify the trend. Now, if you want to ultra short-term trade, then take on the left an hourly chart. Take it under the ATR trailing stop. That's what I do. I take it under the ATR trailing stop. So what I do is take this. So I'll apply it to every layout. And what you'll see over here on the left is now we've taken an hourly. There's a lot of noise I've showed you. You can take off the 9 and the 20. Just take the ATR trailing stop. Is Roper in a downtrend? Well, we already know it is. Let's take a stock like Microsoft. Longer term in an uptrend. But it was in a downtrend on an hourly. So you can definitely find within that hourly, you're going to be able to find like 5-minute bear flags. That's all we're doing. Short-term day trades on the right on bear flags. Longer term, like the Roper, you can do swing trades to the downside. Hope you like this video. This is just a quick primer on which bear flags I look for. Take care.